Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled day. It's Thursday, and let's see, where are we at right now? It's we're looking at the dollar index. We've got that dollar index up there. Looking at that. What else can we say about any of these other things that are going on? I would say that interest rates, as we talked about yesterday, when we looked at all those interest rates, was it yesterday or the day before? We actually looked at the different countries and what action was going on with the. Let's get that mouse going right there, right there. There we are. And we were looking at the. Let me tune into this chat line too. We were looking at the interest rates around the planet, and basically it's screaming at us and telling us that. Rates are still popping up, and they're obviously going to go to 5 now, and maybe even 5.25, and that should, as I say, wake up a little bit more responsibility in our government, and that's probably why we see the Mexican peso act so well, as they realize now that things are going to move into the right direction. Also, I could see interest rates falling back into the 3s, but I don't expect to see it this summer. I expect to see them raise the rates up to the 5s and change, and then basically I thought they would get to 4.75 and halt, but at this point they're using a policy from the old days before there were derivatives in markets, and so it's more of a lagging. Hey Robin, how you doing this morning? Using that as an excuse to have a sip of my tea, saying hello to Robin, and so. And there you can see it on J4X there. The dollar index just keeps on climbing, and we're over the 104s now. And obviously, I always like to think that we're going to see the the 90s again. And I believe one day we will. But with the higher interest rates like that, let's put it up on Chicago Quan at the same time. With higher interest rates, it's awful hard when you look at the interest rates in the States, and then you look at the the United States, and then you look at the interest rates around the planet. You realize that a combination of growth, as bad as our growth is still better than Europe. Fair to Midland. Oh, did you get some sleep? I hope you got some good sleep. It's the where's I at? Oh yeah, so the dollar index right there. You can see dollar index. We're in a weekly buy. You can see the fast algorithm's been in a buy since here, on a weekly basis. I'm not sure why our line's not in there, but the slow algo went into the buy right there, and it's just been pressing up since. And I can't imagine seeing interest rates, like all of a sudden, I think they'll let them sit wherever they're at for a couple of months, at least 3 months, 2 or 3 months, and once they get to a spot. And just let them sit there. And will they go down into the 3s again? I'm sure they will. I'm sure they're going to fight for that historical range of like the 3.5, 3.75 area. So that would make sense to me. Do I think we're going to see zero interest rates again? Not here in the States. Nah, I don't see that happening at all. So all that federal borrowing, thinking that they were going to be staying at zero forever and ever is gone as far as I can tell. That's the way I look at it. What else can we say about these two indices, or this indice on the two screens, is that it just keeps on showing strength. You can see the daily has been, since the fast algo went into the buy right here, we went into a daily buy off of this. And we fall into a sell here, and then get right back into a buy again, and then falls into a sell here for a little bit, and then gets back into a buy again. So the overall strength is up. I don't think we're going to 115, of course. I think we're gonna. I don't even have a range at the moment. I would say probably like 105.5 to 6 at most. But I'm not looking for anything more than that, unless there's some problems around the planet. And then I would expect to see them reaching for the dollar again. As much as a lot of people like to count out the dollar, there's no other game in town. That's the problem. So in other words, when someone says, well, why do you eat there? It's because there's nowhere else to go. Well, you say the food's not that good. It isn't that good. Well, why do you go there? There's nowhere else to go. That's what it really comes down to. There is no other currency minus. I say this seriously too, is I think the European unit, the euro, is a decent tool to be in. You can see the cable is firm. The yen kind of just vacillates back and forth anymore in a much. I want to say is a word I can hear it in my head. I can't say it out loud. I'm trying to think what it is. Fragile. That's the word. I found the Swiss and the yen become both of them become very fragile. Not the stalwart that we were expecting out of these products. Usually they're much stronger and able to hold their ground and hold steady. But to see the Swiss go up to 1 point and change, and then fall to 91 and change in a matter of just a few months, says fragility. And the same thing with the yen. The yen going from the 115 to the 153, 54 area, then falling back to the 128 area, and now I think it's like in the where is it? Let's take a look at it on J4X real quick. And then the yen right now, I think is in the 136-ish area. Let's see. Right there he is. 135. 135 area. So the movement is a little bit more surprising in those two. They're taking on the Turkish characteristic a little bit, just a little bit. Not come on, Turkish lira has gone from 1 to 20, and the yen has gone from 115 to 1.15 to 1.53. I mean, Turkish lira would give its first five born, to have some, have that type of action. But it does bother me to see the Swiss swing the way it did. That really did bother me a lot, and it disappointed me. I was really surprised to see that action. Just tells us how much Credit Suisse, the bank that's having those issues, probably is the Deutsche Bank of Switzerland, and that's probably what the problem is right there. So, anyway, that's my rift for the morning. Let's take a look at the numbers and see how they fly. And let's take a look at the euro, see how that is doing. Right there. And there's the euro. You see, it's been on this downwardly slide since the fast algo broke down, and then the slow joined in back in here, and it closed in that week. Same way. Once it breaks that manifold, the chances of it getting, anywhere else but there is it. As we showed that example last week when the Dow Jones Industrial Average, its algo on Thursday had broken or was it Wednesday? I think the Wednesday it broke the bottom time manifold. Our bottom time manifold. That's what that bottom line. These mirror images are. I call them nonlinear time manifolds. That's how I can relate to them in a math form. And once it breaks, in this case here, when the slow algo breaks it, there's no coming back. It's going to keep on rolling from there. And that's pretty much what happened. And you can see there the euro it's not exactly getting beat up. It's just weak. That's all. Just weak. And it's got to do with the interest rates. I mean, we are sliding. I think, what did we see in Europe? I think the best we saw is maybe 4. Was there a 5%er in there? I don't remember now. I think there was a 5%er somewhere. Maybe in England. Let me just take a look. I'm not going to throw it up on the screen, but I am curious. Let me just take a peek and see if I can see it out loud. Let's see. Trading bonds. UK Treasuries. Yeah, UK Treasuries. Do they have a 5%er going? No. Just the 6 month is a little better than 4.25. The 30-year is at 4% too, and the 20-year. And in Germany, in the German market, they have a 3% for the 1 year, and basically the 2 year is just a little underneath it at 2.92. And but there's no other 3% going all the way out to 30 year. So that's, and let's see what Italy had. I think Italy had some 5%ers. Nope, they're all in the fours, especially starting off in the 7 year, right where notes kind of begin, and bills and notes kind of end, I guess you could say, and bonds start to they start to define things as bonds. And is there really a difference? Not really. But in the old days, probably allowing to invest type of thing. And France, same situation, threes. There are no fours, and so that's pretty much the way the world is right now. Is that the United States is the only one pushing into that, pushing into that area there. So, all right. From there, we'll take a look at the cable. See what the cable's up to. Fair to Midland, huh, Robin? Fair to Midland. Excellent. Navy terms. I like that. And there's cable. You see it's flirting with the daily sell as we speak right now. You can see the fast-moving algo had, I think did it get through the plus at one point? I think it did, or it was just up on the edge. So we're seeing this action here. I kind of think that it's going to probably turn if the cable challenges the lows of last week. More than likely it'll break down again into that area. And let's see what it looks like on J4X. Oh, let's get rid of that. There we are. And go to there. And there it is, cable. Yeah, same situation. See, the fast is trying to move up right now. This is the daily. And a little surprising. It should start to curve since we're curving for the last 2 days. More than likely, see it right here. We've been curving down in the last 2 days. So the chances are 1, 2, 3 days. It peaked out 3 days back, and in the last 2 days it's curving down. So I expect to see the green line here start to turn down at the same time. It's also very tight. We got this little triangle thing going on, or a channel from there. Either one. They're both showing consolidation. That's pretty much what we're seeing there at the moment. From there we slide over to the Swiss. Right there. And again, we're seeing the bounce off of that 90-ish and a half area. And we are heading towards the top end of the range. And over in Chicago Quant, right there, you see it's doing the same thing. It's and I don't expect to see it take out anything more than here. I'm not sure what the bonds are like in Switzerland. I don't see anything up on the screen about it at the moment, but I imagine they're paying in the 2s and the 3s. They're probably like Germany. They're holding them down pretty well. I mean, when they're big, they have a lot of deposits, so I'd imagine they don't want to pay that much interest. And the trick is really to be security. I wonder, I heard, we read where when Credit Suisse started really having problems, they couldn't find a suitor to buy Credit Suisse to straighten out the problem. So then the Fed comes in and does the swaps to the central bank and helps them out. But they tried to break the company up. They tried to do a few things, but more than that, as I said, big money was moving. I wonder how much left the country. Maybe that's what we saw when we saw this thing run way up. Might have been old, long investments that just left the country, and then after they sold out, then they brought the currency back into line again. So that could have been a lot to do with that, more than the idea of like fear the world's coming to an end in Switzerland. It could have been the other way around. Could have been that much money pulled out of the country, and when the money pulled that much pulled out, then they needed to, the currency went flying up into the ones, and now that it's all over with, it seems like they have full control of what's going on. You see that the currency is. Hey Timothy, how you doing? Caught some nice longs on the cable at the 618 and 786 fib levels. Interesting. And targeting 120 127 127.44 fingers crossed here. Yeah, Robin likes watching those fingers too. Let's go over there. Let's see what's going on there. Remember, Doc likes to drift around. If no one talks to me, then I just stay with the rhythm and discipline. But I'm always happy to explore. Always happy to explore. There it is right there. There's the 1 minute, and there is the, let's see. Yeah, you can see that. There's the 1 minute, and there is the 15 minute. And where were you taking your Fibonacci's from? I wonder if we expand this. Are you taking it from like, let's see. Because we can put the Fibonacci, like you're taking it from this high to like, let's move this over a little bit. This low, since it's in this channel, something like that. Like so. And you'll be able to see how our math actually leads the Fibonacci. So in other words, you see here, it's banging against this. And here on the upside, our math breaks down here. I guess goes into a buy, sell, and then it goes back into the sell here. Let's widen this out so you can see it. And let's put that line in there. And let's bring it all the way to the top. There we are. And see, the math picks up the break and goes down. You can see here, picks up the buy off of the, what's that? That's the 50 percentile. The green line is the 50 percentile. And we get into a buy right there off the 50 percentile, and it starts to take off. Then we do it again here. We can just automatically move it over without even having to look. Gets into a sell here, it breaks the 50 percentile, and it breaks down. Our math is confirming it before it happens. That's what's so cool, is Fibonacci is actually built into our mathematics itself, part of the formula. The low is at the 120.31. Okay, so let's go back to there. Where's that? That is the low. There is 119.860. That's from Monday, and the high is, we're using 121.479. What's the low here again? Matter of fact, okay, yeah, so 1.198. 198. So not too far off from your 136. But you can see there, that's how the Fibonacci. Let's go further over and see what's going on here with that. See how it's bouncing off of it. We go into the sell here, from the 50 percentile line, battling back and forth, trying to get to the 0.38. Or is it the 3? Yeah, 0.38. Fails at it. We go into a sell here. No doubt it's dropping a little bit, and then bang, smash-o all the way down. And then you get this right here at the support here. We get a little lift off, and then another challenge to it there. You can see that. And now we are coming off of it again and lifting up. And I guess if our work goes minus and this is having a problem here, it's going to go down. See how our Fibonacci is built into our mathematics, and that's something. Which I have my LinkedIn website. And I have that up there all the time, that it's a mathematical consciousness. Before there was a Fibonacci sequence, there was just the ebb and flow of space itself, and that's what our math is. It's the ebb and flow of space itself in dimensions we can see and dimensions we can't see. There's no doubt about it. It's another dimension. I just don't, there's no seeing it. We can only see objects on it. That's about it. It's kind of like, ever see those scientific boxes where you're doing research on something and you need to put your hands in there? So you put your hands into these big gloves into this research box, and you don't want to, bring it, whatever you're tearing apart or working on is, don't want it to be in your environment. You don't want to be breathing it or anything. But imagine that you couldn't see inside that box. Imagine the box was black and you're trying to figure out what you're feeling. That's how we know that we're in another dimension. We just have no idea why. But we can say that the Fibonacci and our math is measuring something else. It's definitely another surface, but we can't identify it. But it's there. There's no doubt about it. That's probably why Albert Einstein did not get a Nobel Prize for relativity, or objects moving on a magnetic field, as he labeled it. He didn't give it the name relativity. The low is at the 120. Okay, that's right. I read that. 120. Yeah, exactly. So that's what the problem is that we can't identify it. We just can see it. I mean, we can't see it. We can only physically identify it without seeing it from the movement of objects on it. That's the whole story of it all. All right, what do we got? We got 6 more minutes, and this thing will give us a new bar. And we'll see what that does. All right, we will go back and forth. I'm going to leave that up. And matter of fact, I wonder if I should do it this way. If I go like this and go copy window, and now when I drift over to here, and I say paste window, there it is right there. Then I disconnect window like that. Let's see if we can shrink. How do we do that? Go like that. Like so. And then we take this and move it over like that. And we go like this. Let's see if we can do this again, like so. There we are. And then we take this one and we put it to the side of it, like so. There we are. So you can see the action straight through the webinar. Like that. There we go. So you can see that. So in other words, when I go like this and we go over to the yen, and there's the yen, you can still see that chart. Now there's the yen, and let's put it up on J4X. Yeah, I was surprised how fragile both those currencies were, the yen and the Swiss. That really surprised me. You can see we're bouncing up again, trading towards that, what is that? Got up, it was a couple of days ago, we got up to the 135.20ish area. You see the yen is just underneath 35 as we speak, 134.99.7. It's been that daily buy since here. You see that fast moving algo, jumped up, but both joined in. And when they both join in on the same week, could be some hot, heavy action. And it is, it's like a gap up, that type of thing. And, it runs for a little bit and flies here and there and then, builds in a base again and takes off again. That's that ABC thing that goes on that Orion Elliott used to talk about. All right, now let's drift over to, we go to the Turkish lira from here. Turkey lira. And we'll put that up on J4X first. Let's go like that. Ooh, I don't think we're seeing it all. I guess we got to move that over a little bit like that. There we are. There we go. Now you can see that too at the same time. And let's put the Turkish lira up there. So I guess when we go like that, you see it a little better. We go like that, and like there it is, Turkish lira. This way you can see this at the same time. We'll go like that, and as you can see here, it's been moving down, and the money that's coming in from the disasters that have been occurring over the last, I guess you could say, 4 weeks now in Turkey and northern Syria. You can see it here. Is that Turkish lira? No. Let's get the Turkish lira in there. Right there. That's sloping down since the beginning of the disasters. And let's move that zero line up. Let's fix that whole screen, really. Go like that. And that. There we are. So you see there, it's been underneath the zero line, right? It broke down. See, it was reading it. What's fascinating is that it's reading it. Our math is reading it. It makes me curious. I'm like, what am I measuring? What am I measuring? I'm always saying that to myself for like 40 some odd years now. It's like, it's 5 decades. What am I measuring? I have no idea what that is underneath. I just know that it works, and it's ahead of the product itself. So it's reading something that's telling us when the breakdown is coming, which is extraordinary because we know this whole move right here. So let's do this. We know for a fact that this move right here is the earthquake right there. That's the earthquake. Okay? How does the math know? I mean, it's even rising. That's the worst part. This is even rising. How does that math know? It's a consciousness. That's all I can say. That's why I call it a consciousness. Because how does it know? And I see it do that so many times. It really confuses the daylights out of me. And even then, you can see where it does its peak here. The next day, with that peak and finally breaking down, it's breaking down too, just like this is breaking down. And it's doing the same exact thing. It knows. It knows. Matter of fact, I heard a really strange story out of the electric universe. That's the rebel scientists that we are less gravity centric. We are like enormously more electromagnetic field centric. Okay, so in other words, electromagnetic field compared to gravity is to the 39th power more powerful. So it's not just 39 times, it's factorial. 39 to the 39th power more powerful than gravity. Okay? And so we do all, so we're like Maxwell and Ohm and Faraday and Tesla and, who else out there? All the people, that followed in the footsteps of magnetism. Early Einstein, even Einstein's paper that he didn't get a Nobel Prize on, they refer to as relativity today. Its title is, what's the exact title? The exact title is very funny because the title itself is it's talking about magnetic fields. It doesn't say anything about it doesn't say anything about what do you call it, gravity. I mean, it's in there, but it's not. The title itself is On the Electrodynamics of Moving Bodies, not on the gravity of moving bodies. That's the relativity paper. They changed the name of it over time in teens. I guess 1905 he published it, and the title was On Electrodynamics of Moving Bodies. So anyway, that story I heard, I know I drifted a little bit there, but the story I heard was that a day or two before the earthquake, foreign diplomats started leaving the country. A lot of them took off. Now I don't know if there was like a conference somewhere and everybody was heading for it, but I understand that foreign diplomats started leaving the country a day before the earthquake. Now in the Electric Universe, we put out books and so forth that explain, suspicious observers has a whole guide on how to predict, earthquakes ahead of earthquakes before they even happen. So obviously someone gave a heads up to a lot of diplomats and said, get out of Turkey before the first earthquake occurred. So that's all I'm saying is that when I look at our math and I look at, when I look at the math here, how does it know? I mean, here's the Turkish lira moving up. Matter of fact, we could consolidate this even. We can go like that and go and tighten it up a little bit more. You have it there. It's cruising along, going all time. That's an all-time high right there. But our math starts to turn down, and it's saying, this is an issue, and sure enough, it was an issue. So I don't know. I'm just saying. That's all I'm saying is I don't know why it does it. I just can tell you it does it. It does do it, and we showed the evidence of it for almost a decade now here at Dukascopy. It confuses the daylights out of me constantly. So. All right, from there, one more sip. So from there, we go over to, where are we headed now? Let's see. So we got the Turkish lira up there. We go over to the Canadian and take a look at the Canadian and see right there. Oh, there we go. Also, your 15-minute had a problem with the Fibonacci, the point. I guess it's the point. What was that? The 0.62. I guess that's what it is. There's 50.38. Yeah. So heading down, it's the 0.62, and it's trying to break through there. And this is the 0.76 right there, and we're breaking down here at the same time. Now we need to see this, get totally both the green and the which is the slow, and the green and the blue is or the cyan is the fast. We need them both to close underneath the zero line itself. Yes, I have a physics background. That's how I developed my mathematics or my system. It was to fight the Higgs boson back in the 70s. I'm always a rebel. I was with the anti-accelerator people. We were against, as much as I used the accelerator at Princeton, I was an anti-accelerator person. In other words, I used it only for specific reasons, but I didn't believe it was going to give us the answers to what they're looking for. So I tried to develop a formula instead that it would do what the accelerator was supposed to do. And the end result is when they legalized options in '76, I started looking at that thinking, woo, I can be a self-funding scientist. So, go over to that. Yeah. Yeah, I hear you. It's pressing down on it. And our math is rolling over on it. We'll see. We got, this is a 15 minutes, so what do we got? 9 minutes to go. From there, where are we at on currency-wise? We're looking at the CAD. So as we look at the CAD, let's put it up on J4X. We're going to put oil up there. That's how we look at that. We look at the oil contract. In this case here, right? Where is it at? There you go. And so there's the oil has been moving down. And with oil moving down, we see Canadian move up. That's how that usually works. And there's the Canadian right there. And you can see we got through the zero line with no problem a couple days last week. Both of them together, which is a bad sign for the Canadian. It's going to start, it's a good sign for the oil. Maybe we're going to see $70 oil or something like that. Maybe we'll see it fall back. Let's see. Hopefully the news coming up acts as the catalyst to push the trade up. Yeah, we have in about what 24 minutes, we have the GDP come out. That's going to be fun. We'll stay around for that. We'll definitely stay around for that. See what's going on there, because that could be, as usual, always fun. Fun, 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 fun. Fun, 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 fun. Let's see, where else we got there. So from there, we go to the South African rand. Right there. There's the South African rand just marching up at some highs in here, taking out the political highs at this point. That's the only way I can describe it. And you can see here, let's do this. Put the background like that. See it better. At least I can. If that is not good, let me know and I'll change it back to the gray. But you can see here, we do need to make this thicker. That's what it is. Let's make that thicker. There we go. Style. And we'll just make that thicker. There we are. And as you can see, it bounced up. Where is it at? Bounced up down in here. We got into the buy. Let's widen this out a little bit more. And there's the zero line, like so. So we got into the buy here on a weekly basis. And they both joined in together and you get that mad run. When they both join in on the same week, I'm telling you, they do the ABC. They take off a little bit, they try to back and fill, and then they take off again. That is the norm for it all. So now from there, where do we go from there? Let's jump over to, let's see, where is it at? Right there. We'll go with that. Let's put gold up on J4X. Let's see. Where's gold? There's gold. And so gold is doing its best to slide down, just like the way South African rand is sliding up. And what do we have? We have 6 more minutes for your next reading on this. Now let's put, what is that? Let's put gold here up on the screen. And there's the gold. Moving. It's not really moving down much. It's in a sell. It's in the weekly sell. It's just got pressure on it. Again, interest rates are rising. With interest rates rising, that freaks the price of a lot of things, It does. It does, it does. And then from there, we go over to let's see. We go to the Mexican peso. Right there. In fact, I can close that page altogether since I have that one. Close workspace. Yes. There we are. And then right there, let's put in the Mexican peso. There it is. And making new lows. And as I've said before, usually the Mexican peso really reads American politics well. So obviously it's trying to tell us that we're the place to be, because remember, everybody else's currency is losing against the dollar, and our currency and the Mexican peso is gaining against the dollar. The less pesos, the more valuable it is. Obviously, they're stronger than the dollar at that moment in time. So that's where we're at. That's the currencies. If anybody wants to see anything else in currencies, just give a shout, and we will drift over to them, to them. Oh, where's the chat line? What did I do to the chat line? There it is, right there. There we go. Now I can see the chat line again. Let's see. Timothy said trade up coming up. Yeah, the news. That we'll see what that does. I'm not too convinced that it's going to be. I don't know. I think that I would have to believe that GDP is going to go down, and if GDP, they're projecting 2.9, and if it comes out like 2.5 or oh no, wait a minute. Is today jobless and tomorrow? Which one is it? Let me just take a look. I thought today was GDP and jobless was tomorrow. Jobless claims. Oh, they're both today. Okay. So it's not only is it jobless claims, but GDP today at the same time. Okay, so that makes sense. So they're looking at 2.9 for Q1, Q4. I'm sorry, Q4. So, last year. So, I mean, if we see like, 2.5 or something like that, that should put energy into the market, which should put energy into the cable to go up because they're thinking interest rates are going down, that type of thing. So, yeah, I could see that. I could see that action pretty well. I'm not sure if it's going to happen, but we'll see. It's so hard to say because some of these numbers are so adjusted in the oddest ways anymore, like the labor number and so forth, that they're designed not to tell us anything but relatively good news, which is odd. That's during the Obama years. He changed the way they do the stats in them, and it doesn't really give us as fundamental a number as we want, but everybody's incorporated to follow them. And what I mean by that is when they incorporate and they create their manifesto, their corporate manifesto, they usually include those things in there, so they have to follow them no matter what. All right, Timothy, here it's coming. It's coming. We got less than a minute. And we got 38 seconds to be exact. And they'll give us another flavor of another bar. And we can get rid of the currencies at the moment. Let's see where we go to. We'll go to, there is the gold, so we might as well take a look at silver. Now, gold barely moving. It's down a little bit, nothing major. Silver, I think it's pressing down too. No, it's popped up. It's trying to get into the plus. Both are in daily sells and weekly sells. There you go. Wow. Look how, it's getting closer, but still in the buy. It is still in the buy. So maybe it's going to climb. Now I guess it's going to climb above that Fibonacci line. And that's pretty much the way I see it at this point in time. And so we've got 14 minutes now to see what happens. Wow. All right. From there, we go over to copper. Copper jumped into the buy again, or jumped above. It was playing with the sell yesterday, and it failed at it. And today you can see it's a little bit lower, nothing major. It made a low and keeps on finding ways to climb back up again. You can see the strength in that there. And at the same time, you can see we're in a weekly sell, and the fast-moving algo is right on the edge. Just, what's that, 0.0042. It just changed from 40 to 42. So it's just on the edge there. But, look at these slow algo. Just kind of broken that manifold. So it's not really that happy at all. It's not in a good mood. They say that the cable is moved around by quant bandits. Quant bandits. I like that. I like that title. Well, I imagine that most of the markets are nowadays. I mean, I can say this honestly, and it's very easy to prove, and that is that technical analysis has never been more accurate than it has during this QE era, the quantitative easing era. So, fundamentals, as Janos here, the head market analyst, has said and made a few videos about it, that basically that the how did they put it? The technical analysis itself with QE just makes it so much more accurate that you. Oh, I know. Is he said fundamentals are basically dead. Now we have seen fundamentals come back to life a little bit, but overall fundamentals are not really moving markets as well as in other words, we know in was it 12 minutes? In 12 minutes, they're going to come out with some economic numbers, big fundamentals. And normally, when that would occur before quantitative easing in 2008, then what happened was, that would go on for a couple days. The trend would kind of carry forward. It was the fundamentals led the market. But now, without a doubt, technical analysis leads the market. And that's because fundamentals are skewed because of the Federal Reserve's influence on the marketplace. The likes of Jimmy Simons. Oh, wait a minute. Where are we at? They say that the cable. Okay. Oh, they're saying chain smoking Jimmy is. You're saying that Renaissance is influencing the cable? Is that what you're saying? Yeah, they probably are on some level or another. They're more of a position options trader, but anything's possible. They've got enough money to do anything they want. So, Jimmy Simon's organization is the number one hedge fund in history. And pretty much most people don't. Yeah, they have the Magellan Fund, is it? I think they and their company is called Renaissance Technologies. Yeah. Chain smoking Jimmy. Yep. There's an interesting bunch right there. Oh, you can see it there. Let's see. They have algos that pin the markets left, right, and center. Well, they're option traders. So they what they do is they buy straddles and they can adjust and pin to some extent anything they trade because they're using options. Jimmy's company is option centric, I guess you could say. They're option centric. And I see this now. What do we got? We got, I guess, at 5 minutes ago, they released some of the information on GDP to the reporter. So the information is relatively out right now. And we're seeing some firmness in the stock market as we speak. Matter of fact, if we go over to the stock market right here, not only are we seeing this rise, in other words, insinuating that interest rates are coming down, but I bet we see the stock market doing the same thing. So let's go to that. Let's see, where is it at? Let's make a copy of this. Copy. Oh no, I can paste it. That's what I can do. So we go right here. There it is, right there. So you can see here the this is the stock market. The stock market's at the highs of the day now. So they're doing the same thing with the stock market. It's going through the zero line right here. It went into a buy off of this one or this one. Either one, it's still going up. Did its little ABC and it's heading north. Same thing right here. It went into the buy right here and it's taking out the highs of the day, and you can see it's still climbing. So they're anticipating right now that the markets are, now peg. What they'll do is, if you have enough gamma, I know we're talking options and it scares a lot of people, but there's not many people here today, so it doesn't matter. But when you have a lot of gamma in the option positions, you can, peg things. They peg what they call peg strike prices. So that doesn't surprise me any. So chain smoking Jimmy's pegging the cable. Cool. All right. From there, where were we at? Oh, let's go back to, was it there? Yeah. So there's copper. Let's take a look at platinum and palladium, since we have them. There's platinum. Platinum's been in a buy for like 5 days now. This is the 6th day. Weekly's having a hard time changing, but the pressure is on the upside on the short term. And then let's look at palladium right there. And palladium went into the sell yesterday, and let me just give this a refresh because it looks kind of a little wonky. A little wonky. It looks a little wonky. There we are. That's better. So it went into the sell yesterday. There's Monday, there's Tuesday, there's Wednesday. We're Wednesday now. No, it's Tuesday, Wednesday, Thursday. We're in Thursday, so it's unchanged at the moment. And you can see that's been in a weekly sell for 5 full weeks, almost 6. So you can see that pressure on the metals complex. Again, they're adjusting for the raising of interest rates, not the lowering of them. But yeah, that's what it's about, Timothy. They're pegging the strike prices, and when you have enough gamma, you can get away with that because it's a limited risk factor, really, in the end. It's not like you're naked long or naked short trying to pin something like a cornering of the market, like the Hunt brothers with silver back in the old days, or something like that. Let's see. From there, we head over to the energy sector. And so there is crude oil, that's spot. And you can see it's doing a little bounce up at the moment. Interesting. And let's see what Brent is doing. Maybe Brent is trading in the 81s, 82s. Let's see. There's Brent, 81s, 81.53. You see that little bounce thing going on there. And I don't see metho in here. But how about that 190 something yesterday in the natural gas, under $2 for a while. Nat gas. Then from there, let's see what else we look at here. We go to the, we got about 5 minutes to the news. 5.5 minutes, something like that. Yeah, about 5 minutes to the news. So from there we go over to, there is Brent. And we're looking at, there is Texas Intermediate. And so that's trading at 74, almost 75, 74.95. Let's see what the back month is looking like. See what kind of premium is in there. And that's trading at 75.28. So there's about 33 cents of premium in there for the couple months. What else can we say? Here you go. What's interesting is look at this on your pound. The pound is jumped back over the zero line totally. It's still in the buy from here. It tried to get weak, and it didn't do too good a job. It hit it and started to break down. And it's right on the line itself as we speak at 120.46. Almost, now it's 48. And they're anticipating a lower, they're definitely anticipating a lower GDP. That's the way I see it. Oh, someone's saying something about the GDP as we speak. Hold on a second. Let's hear what they have to say. Someone's thinking it's going to go to 3. So are we seeing the classic? Be careful, Tim. Remember, Remember, they take markets up to take them down, and they take them down so that they can take them up. So in other words, if they want to short the market, the first thing they do is they try to push it up a little bit so they can sell into it, and vice versa. So maybe someone's saying they're thinking it might be 3. So it won't be like 2.4 or 2.7. It'll be the other way around. It'll be like 3 instead of 2.9, which will put pressure again on the cable and will put pressure on the stock market. So maybe the strength we've seen is more of trying to take them up so they can sell a little and then take them down. So it's not their algos that are pinning the currency at Renaissance. It's their option positions. That's what they're doing. It's with their option positions that they pin it. All right. From there, we go over to the natural gas itself. Right there, natural gas. Look at it, it's still rising. Cable is still rising against the dollar. And here is nat gas just hugging almost the $2 area. It's at 217 today. And we're still in that daily buy right there. You can see, right here, we're still pegged to that. And you can see the green line, or the slow algo is trying to lift up. The fast one is just through the 0 line by the hair of its chinny chin. And so that little battle is going on. Let's see. They have an algo to pin. They have long positions in already. I see them going up. Yeah, I know. I'm seeing the same thing. They're all going up. You can see that cable's now at 120.51. So, and we've got, where do we got here? We've got 1 minute and 16 seconds to the news. So we'll see what that does. I see. Strategic wealth. Okay. And they're doing the same thing to the stock market too as we speak. Right here. You see that but they're backing it off a little bit now. Look at that on the short term right here. They've actually pushed it into the sell. It's in a sell on this right now with less than a minute to go to the news. They're pushing it down, and the longer term one over here on the right is still in the buy. So don't just watch out. It's not in a sell, but it's trying to get into a sell. When the two of them join together, that's when you trade them. All right, we've got what do we got here? We've got something like 10 not 10 seconds. We have 15 seconds to go, and the number will be out. Notice that they're taking your cable back to the Fibonacci line, and we've got 5 seconds. Let's see. There they go. There they go. The news is out. And the first inclination was buy and then sell. Let's see if they buy again. And cable is still parked at 47. Now it's 53. That was a nice 4 pip move. And let's see what the numbers are. Waiting. Let's see. The numbers are out. And let me see what they are reporting. It's not really moving anything too much. So, there you go. What they did is they did the classic. They take it up to take it down, I guess. And same thing with the stocks. The short term was being pushed down, and now the longer term is starting to join in. So I'd imagine it might have been 2.9. And so U.S. Treasuries are moving up a little bit more. Let's see. I'd imagine it was not too loud in either direction, just solely because I don't see a big move going on here. Here it is. Here's the exact numbers now. 2.7. So consumer spending went up. Uh, okay. And 62% of the GDP is consumer spending. I see. Okay. All right, so that's what's happening. So continued jobless claims also. Jobless claims 1,654 versus 1,700,000 estimated. So jobless claims dropped. And so you can see here the stock market and the cable backed off. And what did they do? They took it up to take it down. The classic as usual. Renaissance trade straddles more than anything else. So I have my doubts that they're like naked long. They have gamma to give them the opportunity to be long or short, but they don't trade that way. They're not, they play direction, but they don't play it the way you're thinking. When the way you described it there, they have long positions already. I see them going up. Don't know if they have straddle on. They make money on either side of it. Sometimes they'll play around with butterflies, or they'll sell premium deep down and in puts to make them long, but they're not. It's not the way you're thinking. Bad news for the dollar means positive for the pound. Yes, but in this case here, it's dropping against the dollar at the moment. And you can see that big long line there. So it was 2.7, but the consumer prices rose, and they were hoping for them to back off, and that's why they're not excited about the 2.7. And you can see here, still in that, it's pushing now into the sell there. So that they might take my low at 120 as a liquidity before going up. Possibly so. Take them down now to take them up. Possibly. At this point, the stock market has backed off a little bit. Notice that they're not really moving that much at all because the numbers are not reflecting anything in either direction at this point. There's no real consumers are still purchasing. The Fed wants the most important thing to remember out of all this is that the Fed wants the consumers to stop buying. That's what this whole thing is about. So in other words, if consumer spending had dropped and GDP had dropped, they would be thinking, well, actually, when you think about that, that means that the Fed is getting its job done. But instead, consumers, which is 62% of the index, rose. So that's got the market saying, it's not a good sign at all. The 786 is holding. Yeah, traded right down to it. And we're trying to get into it's slowly inching back up. So stocks are basically unchanged from it all. I mean, it's down from where they were. You can see they're starting to add some strength into it here. All right, traders, we are out of here. This is Doc. We'll see you tomorrow, same time, same channel. So, happy trails to you until we meet again. Happy trails to you. To all our trading friends. Later, traders.